Hello everybody, as we have already completed Fundamentals of Accountancy, Business and Management Part 1, it's time for us to check our knowledge. Welcome to Basic Accounting Multiple Choice Theory Questions. In this lesson quiz, 10 multiple choice questions will be asked. The answer will be given after each question, so I need you to record your scores. If you're correct, you just put a check mark, and then if you're incorrect, make sure that you understand what made you wrong or what made you answer wrong in that specific question and understand it very well. Okay, so if you got 10 points, then you are an accounting wizard. 8 to 9 points, you're excellent. 6 to 7 points, that is very satisfactory. 5 points is our passing score. 2 to 4 points, that's a bit unsatisfactory, but I hope you don't get a score of 0 to 1 because that really needs you to improve in the lessons. Okay, so let's try first one theory question and then try to answer it, and then I will reveal the question before we formally start with the 10 questions. Okay, let's start. Two scenarios happened in the ledger as noted by the accountant. Number 1, left side postings of 10,000 pesos and 24,000 pesos to an expense account. Number 2, right side postings of 70,000 pesos and 20,000 pesos to a revenue account. From these scenarios, we can say that A. Both are decreasing revenues and expenses in their normal balances. B. Both are increasing revenues and expenses in their normal balances. C. Scenario 1 decreases expenses while Scenario 2 increases revenue. D. Scenario 1 increases expenses while Scenario 2 decreases revenue. What's your answer? Okay, you can pause the video to think about the problem. The theory. Okay, when you say theory question, it does not ask you of a computation. It's just something about technical knowledge, but not necessarily you will be computing amounts. Okay, so the correct answer is letter B. Both are increasing revenues and expenses in their normal balances. Why is B the correct answer? If you will be looking in number 1, the left side postings of the amounts of 10,000 pesos and 24,000 pesos was posted in an expense account. So an expense account has a normal balance of debit. And then right side posting of 70,000 and 20,000 pesos to a revenue account. When you say right side, that's credit, and the normal balance of revenue is credit. So both transactions are increasing revenues and expenses in their normal balance. The normal balance of an expense is the left side, which is debit, and the normal balance of revenue is the right side, which is credit. Okay, so that's how we will be answering the question. I will be reading the question first. You can pause the video if you need some more time to think about the question, and then I will reveal the answer and the explanation for the question. Okay, so take note of the questions which you got correct and the questions which you got them incorrect, and then compute for your score, and then make sure that you understand the questions that you got incorrect. Okay, let the games begin. Question number 1. Increasing assets and decreasing liabilities in terms of debit and credit would be A. Debiting asset and debiting liability. B. Debiting asset and crediting liability. C. Crediting asset and crediting liability. D. Crediting asset and debiting liability. Increasing assets and decreasing liabilities in terms of debit and credit would be A. Debiting asset and debiting liability. B. Debiting asset and crediting liability. C. Crediting asset and crediting liability. D. Crediting asset and debiting liability. The correct answer is A. debiting asset and debiting liability. When we increase assets, we put them on the debit side. When we decrease liabilities, we also put them on the debit side, because if we increase liabilities, we put them on the credit side. So the correct answer for question number 1 is A. Let's continue with question number 2. Which of the following statements regarding accounting is incorrect? A. Accounting is regarded as a service activity. B. Accounting deals with quantitative information, which is primarily financial in nature. C. Accounting is a service activity which provides financial information for economic entities and is not intended for use of non-profit entities like foundations. D. Accounting helps in economic decision-making. Which of the following statements regarding accounting is incorrect? A, B, C, or D? The correct answer, what's the incorrect statement? It's letter C. Accounting is a service activity which provides financial information for economic entities. That phrase is actually correct, but what made this statement incorrect is that accounting is not intended for use of non-profit entities like foundations. Actually, non-profit entities like foundations or churches also need accounting information. Letter A is correct because accounting is a service activity. Letter B is also correct because we deal with quantitative information which are financial in nature. And letter D, accounting helps in decision making. So the incorrect statement is letter C, because we also use accounting in not-for-profit entities like foundations and churches. And we continue with question number 3. Which of the following statements best describes the differences or similarities between financial accounting and management accounting? A. Financial accounting provides information primarily for internal users, while management accounting provides information primarily for external users. B. Financial accounting provides general purpose reports, while management accounting provides special purpose and specific reports to answer managers' needs of information. C. Financial accounting information can also be used by internal users, and management accounting information can also be used by external users. Letter D. Reports generated by financial and management accounting is intended only for the use of internal users. Which of the following statements best describes the differences or similarities between financial accounting and management accounting? A, B, C, or D? The most correct statement there is letter B. Financial accounting provides general purpose reports. When we say general purpose reports, these reports are being released to the external users of accounting information. Management accounting provides special purpose and specific reports to answer managers' needs of information. And when we cater the information needs of managers, we report to the internal users of accounting information. Always remember that financial accounting reports to the external users of accounting information, while management accounting reports to the internal users of accounting information. That's why letter A is incorrect, because financial accounting provides information for external and not internal, while management accounting provides information for internal, not external. Letter C, financial accounting information can also be used by internal users. That's correct. Financial statements can be used by managers, but the reports being generated for managers cannot be used by external users because those are company secrets. And for letter D, reports generated by financial and management accounting is intended only for the use of internal users. Always remember that the goal in accounting is we can provide external users of financial information of financial statements that will be readily available to the general public. So the correct answer is letter B. We continue with question number 4. Cash will have a debit posting in the ledger in all but one of the following scenarios. A. Receiving cash from rendering services. B. Collection of accounts receivable. C. Payment of an account payable. D. Payment by a customer to the firm of a fee outstanding. Cash will have a debit posting in the ledger in all but one of the following scenarios: A, B, C, or D. The correct answer is, where will we have a debit posting in the ledger in these choices, and where will we don't have it? The question is in all but one, which means where will we have a credit posting in the ledger for cash? The correct answer is C, payment of accounts payable. The question is in all but one, which means that we're looking for the transaction which will have a credit posting of cash. Letter A, receiving cash from rendering services is debit cash credit service revenue. Letter B, collection of accounts receivable is debit cash credit accounts receivable. Letter D, payment by a customer to the firm of a fee outstanding. Someone paid to an entity. So basically, that's a customer paying to an entity. And that's similar to a collection of an account receivable. So the best answer is letter C. A payment of account payable will credit cash. Debit accounts payable, credit cash. When we pay liabilities, we credit cash. And we further go on with question number 5. A credit balance in this account as presented in the trial balance would mean that there is an error. A. Accumulated depreciation equipment. B. Accounts receivable customer. C. Capital. D. Professional fees. A credit balance in this account as presented in the trial balance would mean that there is an error. A, B, C, or D. In order for you to answer this question, you need to know the proper debit and credit rules. Now, if this account has a credit balance, then there might be an error. And the correct answer is B, accounts receivable customer. Accumulated depreciation equipment has a credit balance because that is a contra asset account. Capital or owner's equity has a credit balance. Professional fees or service revenues rendered by professionals, that is also a credit balance because that is a revenue account. So accounts receivable customer is when it has a credit balance, you can infer that there is an error because accounts receivable has a debit balance. Question number 6. Unearned revenues can be best described as revenues: A. Collected and earned. B. Not collected but already earned. C. Collected but not yet earned. D. Not collected and not yet earned, hence a remote transaction. Unearned revenues can be best described as revenues: A. Collected and earned. B. Not collected but already earned. C. Collected but not yet earned. D. Not collected and not yet earned, hence a remote transaction. The correct answer is letter C, collected but not yet earned. Unearned revenues are advance payment of customers in which the liability of the company is to render the service to their customers. So the correct answer is letter C. These are collected but not yet earned. Now, when the company has already rendered the service to the customers, then we debit what? What do you think? Do we debit? We debit the unearned revenue account and then we credit the revenue account for the transaction that was already performed to the customer under the liability method of adjustment. We continue with question number 7. Which of the following accounts should not be seen in the statement of financial position? A. Cash. B. Salaries payable. C. Charity contributions. D. Prepaid expenses. Which of the following accounts should not be seen in the statement of financial position? A. Cash. B. Salaries payable. C. Charity contributions. D. Prepaid expenses. The correct answer is C. Charity contributions. Cash is an asset. It should be seen in the statement of financial position or the balance sheet. Salaries payable, you might construe the word salaries as an expense, but remember, when you say payable, that is a liability. So that is also part of the statement of financial position. Prepaid expenses are assets. Do not be misconstrued by the word expenses. Remember, expenses that are not yet used is prepaid, or advance payment for expenses are prepaid expenses, and those are assets, so it shall be part of the statement of financial position. Charity contributions are expenses and should be part of the income statement. We go further, question number 8. Regarding debits and credits, which is true? A. In the income statement, debits are used to increase account balances, whereas in the statement of financial position, credits are used to increase account balances. B. Before adjustments, debits will not equal credits in the trial balance. C. The normal balance of equity is the same for liability. D. In the income statement, revenue is increased by a debit, whereas in the statement of financial position, capital account is increased by a credit. Regarding debits and credits, which is true? A, B, C, or D? The correct answer is C. The normal balance of equity is the same as for liability, because the normal balance of equity is credit and the normal balance for liability is also credit. We don't have any concern with the rules of debit and credit when we are already preparing the income statement or the statement of financial position. And always remember that even before adjustment, during adjustment, or after adjustment, debit will always equal credit in the trial balance, because starting from journalizing to posting to trial balance, debits should always equal credits. Question number 9. Which statement best defines an accrual? A. Adjusting entries where cash flow precedes revenue or expense recognition. B. Adjusting entries where revenue or expense recognition precedes cash flow. C. Adjusting entries where cash flow and revenue or expense recognitions are simultaneous. D. Adjusting entries where revenue or expenses are recognized in the absence of cash flow evidence. Which statement best defines an accrual? A, B, C, or D? The correct answer is B. An accrual are adjusting entries where revenue or expense recognition precedes cash flow. It means that we recognize first the revenue or expense, but we set up an accounts receivable for revenue because we are not yet receiving the cash flow, or we are setting up an account payable or a payable account for the expense recognition. And last question, question number 10. Accounting lies on the objective that it should be a useful tool to be able to provide the users of financial information make better economic decisions. Truly enough, reports generated in accounting becomes a way for these said users to understand the entity better. For this cause, accounting is called the language of business. With these points given, we can say that A. A structured representation of the financial position, financial performance, and cash flows of an entity can be provided by accounting through reports known as financial statements. B. Management accounting, being more concerned on reporting to internal users of accounting information, heavily becomes more important to managers than information provided by financial accounting to outside users. C. The manner of presenting financial information is of paramount importance to taxation and government authorities. D. Increased demand for accountants is needed worldwide because of the influence of the accounting to the society at large. A, B, C, or D? The correct answer is A. In the question, you are being asked of what statement is related to the main or major statement above. Well, it gave you that accounting lies on the objective that it should be a tool to provide information for decision making. And then, the reports in accounting becomes a way for these said users to understand the entity better. The reports are used in order for us to understand the entity. With that, accounting is called the language of business. How can accounting communicate to the users of accounting information? It is from the financial statements because it can provide information about the financial position, financial performance, and cash flows of an entity. Okay, so that's the end of our quiz, and check your answers, and these are the points that we have here, and I hope that you enjoyed our short quiz for today. And our next lesson, or the next lesson quiz, we will be solving problems. Okay, so thank you and have a great day.